Hey everyone, and welcome back to the breakfast show. Good morning, good afternoon to everyone, maybe even good evening. It is the big day. As someone said in the chat, today is the day where we might know whether or not we're going to end November green or red. Nvidia reports after the market closes. I think we can all say quite comfortably that Nvidia will beat their own guidance and maybe even the analyst expectations. But will it beat by enough? Will the comments during the earnings call be good enough to reassure the market that we are not in an AI bubble, that there is really a lot of demand, not enough supply at the moment? I think that's the big deal. It's not the numbers. The numbers are going to be fine. Someone said in the chat, I mean, all of the big tech players reported excellent figures. They're all spending quite a lot of money. Most of that money is flowing through Nvidia. The comments that we're getting from some people in the industry also seem to be quite positive. So I don't think that's the issue. I think whatever is going to move the market, again, the implied move for Nvidia is 7%. Upside or downside remains to be seen. And maybe I'll run a poll in a bit. But it's all about the context. What Nvidia is seeing, if they've seen maybe an acceleration in adoption, things like that. We will have, well, hopefully Jose is going to join me later this morning, whether it's for the open or before the open, so we can talk a little bit about Nvidia, CoreWeave, Nebius, and some other things as well. Later today, we are, of course, going to have a big stream with Amit, Jose, myself, maybe someone else, covering Nvidia's earnings report. Now, you might say, what's the big deal with the PayPal announcement? What's the big news around PayPal? Well, it's not Alex Chris answering my tweets, unfortunately. By the way, this is the pre-market right now. Not too bad, as Novak said during a press conference. Not too bad. Huh? Everything's green for now. On the watch list, Apple is a little bit down here, but it's much better than yesterday. It's much better than yesterday. Again, it's pre-market. It's all anticipation of the big earnings report. But the big deal for PayPal is this, unfortunately. Unfortunately, it's not Alex Chris answering my tweet of demanding an accelerated buyback, but it's It's this. It's Liverpool welcomes PayPal as the club's official digital payments partner. I know, there are a lot of Liverpool fans that are watching the videos that are maybe right now in the chat as well. I know there are a lot of United fans here supporting Bruno Fernandes. I know. But yeah, as a Chelsea fan, this is a bit too much. This is a bit too much for me. But okay. Anyways, Liverpool is proud to welcome PayPal as the club's official digital payments partner in a new global multi-year deal. This marks PayPal's first ever collaboration with a Premier League club, further positioning the company as the smarter way to pay for football fans globally. I do wonder why they didn't do this before the season started, but fine. I think we're 12 games in? Well, more if you include Champions League. But yeah, you're going now into a very very busy period, so might also be a very good time. So what's the deal here? One of the ways this partnership will make sure that the fans are benefiting from that is going to be via PayPal Plus, the company's brand new first ever free loyalty program where fans can earn reward points when using PayPal to pay for match day purchases, adding to the experience and elevating engagement. And loyalty will be rewarded. Starting at the blue tier, now we're talking. Blue is the color. Consumers unlock gold and black tiers as they earn more points, with each tier recognizing loyalty with even bigger rewards. Gold and black tier members enjoy points worth up to 50% more at checkout, along with access to other exclusive Liverpool FC perks. So, in case some of you watching are Liverpool fans, download the app, and whenever you're buying merch or you're going to watch Liverpool lose, purchase those tickets through the PayPal app. Benefits us PayPal shareholders, and it benefits you as well because you are going to get rewarded. Now, the jokes aside, Liverpool is of course a huge club, not just in England but around the world. It's a huge club. It's good to see PayPal having this first ever collaboration with a Premier League club. Hopefully, it's not the last one. But yeah, this again will probably increase the amount of payment that run through the app, the amount of engagement through the app, rewards, points, more time spent maybe in the app, buying more things. So yeah, good announcement. It's not an accelerated buyback that I will keep pushing. I will keep tweeting every single month to Alex Chris until they actually accelerate the buybacks. But yeah, all in all, it's a good announcement. It's a pretty big announcement as well. By the way, Alex Chris, 9 a.m. Eastern, which is almost now. He's going to attend a city conference. Let's see what they discuss there. Maybe this will pop up. Maybe they'll announce something else. But yeah, Alex Chris is going to speak in a bit. We'll maybe cover that tomorrow or something. But yeah. Am I also having EA servers trying to play? Well, I'm not buying FC 26, so I don't know. I'm still on 25, and I will only buy FC 26 when I get my 50% off as usual. Because let's face it, it's always the same game. It's always the same casino. It's a shitty game. Let's be honest. It's a shitty game. But no, I don't know. I don't have issues. So, for the Liverpool fans, congratulations. For us PayPal shareholders, I guess this is good as well. For us PayPal shareholders and United Chelsea fans, well, I have nothing to say. If I speak, I'll be big trouble. Big trouble. Anyways, moving on to something better. We have some news with regards to Nebius. So citizens initiates at market outperform, sets a price target of $175. Analyst highlights major GPUs as a service contract with Microsoft and Meta and affirms full separation again of the Russian ties post Yandex. Fine. Again, this is them initiating coverage on the stock. The reasoning behind it is is something we've known about for a long time. So nothing really changes. Yes, it's very exciting to see that they have a price target basically 90+% higher where we're at right now, but the reasoning behind this is quite weak. Like, this is nothing new here. They also initiated a coverage on Cypher here as well, 105% increase in the price where they're at right now. The key takeaways here are major upside as Cypher pivots to high capacity HPC infrastructure with 3.8 gigawatts pipeline in Texas. Entire capacity located there, positioning for industrial scale deployments. Long-term value could exceed $90 per share as pipeline scales. So slow down, my guy. Could rival major HPC players like Stargate, which has 3 gigawatts planned. So same analyst, 2 new initiations, Cypher and Nebius. As for Microsoft, we've got here, in this case, a buy rating. Yesterday we had, I can't remember the name, but two downgrades. Today we have one basically flat note. Buy rating, still a buy rating, and the same price target here at $675, 36.7% higher than when we're at right now. Shift4 did get here from Tourist a hold rating, but they did cut their price target from $80 down to $74. They said the following thing. One event to focus on is the post Q3 model update following SmartPay acquisition and revised volume assumption. Hospitality and restaurant vertical showing weakness into 2026-2027 is something that they mentioned in the quarter. Net revenue raised slightly for 2026, flat to down in 27, and bottom line was raised by 1 to 2 percentage points across Q4 25 all the way to 2027, aided by higher take rate mix. Remember, they are also the number one player in stadiums, sports stadiums in the United States. Next year, we do have a World Cup in the United States. I assume that Shift4 is going to benefit from that a lot. They're going to benefit from that a lot. Has anyone told you look like Bruno Fernandes? No, nobody told me this. First time I'm hearing this. What happened to Micron 1 hour ago? I did see a comment on Micron. Let's see. Maybe not here. So Micron CTO said Micron is the strongest position in history. Strength of Micron is ability to generate new technology in quick and efficient manner and then deploy it fast. We also have 1 gamma node at mature lead and ramped on some products and will continue to ramp on more products over the next 2 years. I don't know if that moved. The stock is down 1.5%. Maybe something else was mentioned. Let's see. So they're also at a conference right now. And this is basically what they said. Let's see if we see something of a weakness in those comments. I don't know. Doesn't seem like it. But then again, Micron has been going up significantly. I'm not complaining, of course. But yeah, no. Micron is pushing multi-year customer agreements and says its $18 billion capex run rate will face upside pressure. Maybe that one. I don't know. The CEO said that AI demand plus HBM's heavy silicon use are tightening both DRAM and NAND, with supply coming in inadequate and tightness seen beyond 2026. Nothing really surprising. Nothing really surprising. So, okay. Nothing surprising. Stock right now is down 1%. Big deal. Down 1%. So not much, and it's still up significantly. Yeah, still up 94% since the start of September. It really did not have such a big pullback compared to all the other players out there. All the other players out there. Yeah, I mean, yesterday, I know we talk a lot about sports here. I know, but we do everything. We do everything. Yesterday was crazy, crazy. The Scotland Denmark game, McTominay with a Ronaldo like bicycle kick. Then we have Tierney and forgot the other guy that scored from basically the middle of the pitch. 4-2. Insane game. Insane game. The day before, 2 days before, we had Ireland with a huge comeback as well. Incredible. I don't know if I have Irish viewers or Scottish viewers, but congratulations on qualifying to the World Cup. To the World Cup, it's going to be exciting and interesting. Imagine Scotland against Ireland or England. Oh, I'd pay a lot. I'd pay a lot to go to that game for sure. Not for the quality of the football, but for the ambiance. We do have some more comments here from Micron. Q2 will produce better margins than in Q1, their fiscal year Q2, of course, not Q2 calendar year. So it seems like there were some positive comments all in all, which I'm not surprised that they are really in a strong position right now for Micron. And I do expect that to continue. Of course, at one point it might top, but I don't think we're there yet. So I do have some Scottish viewers here. Welcome and congrats again. Yeah, United. I don't know what you guys were thinking about when you sold McTominay, but this guy is having the time of his life in Napoli. Oh yeah, Adobe bought a marketing platform, Semrush. The name tells me something. I think we've spoken about Semrush with another company previously. I can't remember who, but Adobe is going to buy them for $1.9 billion, I think for $12 per share. And Semrush right now is worth or was worth a lot less. Yeah, Semrush was, wow, very random. But if someone owns Semrush, you are basically up 73% right now, pre-market on this deal, because Adobe is paying $12 per share. And the stock was basically trading at $6.8 right now. Not too bad. I'm getting spammed by Semrush ads on YouTube. Well, maybe you should have bought the stock. If you bought the stock, you would have been up 70% in one day. Huh. Not bad. Not bad at all. Let me ask Jose if he's sleeping or if he's joining. Voila. What are my thoughts on Gemini 3? Well, I've played around a little bit with the Gemini 3. I've showed it in yesterday's video as well. Some cool things that people have already created with it. Maybe I have some bookmarks. I like it very much. I also like the updated app. Very cool. Very, very cool. And of course, the stats, the performance is well, it is much better than the rest. It's much better than the rest. cool thing here. So Gemini helped me understand DDoS. So this is basically what happens. This is basically what happens. So it explains to you what it is, and then it simulates an attack. All inside AI mode, by the way. It's pretty impressive. Right? You can choose the attack intensity, and you see exactly what happens. Here you can activate the firewall, and then do the exact same thing. Plus, the fact that you are also integrated into the whole Google suite of products is very nice. It's very neat. It's very neat. If you Google Sheets, Google Docs, whatever, Gmail, they've done a good job. They've done a good job. Remember, not that long ago, people were saying that they're going out of business. All of the things, right? Brad Gerstner, 10 blue links, 10 blue links this, 10 blue links that. Yeah, don't think we're talking about 10 blue links anymore, my friend. Don't think we're talking about 10 blue links anymore. Yeah, the poll. Thank you for reminding. Start the poll. Nvidia after earnings, up, down. There's no option for flat. It's up or down. Voila. Better. Gemini 3 is also among the priciest, but you're not only paying for Gemini 3, right? You're paying for Google One. So you get a lot more than just Gemini. Isn't there one where you also get YouTube Premium? Yeah, the most expensive one. Okay, forget about that. Forget I mentioned anything. But yeah, the other ones are, they're maybe a bit more expensive. I don't think they're that more expensive than ChatGPT, but at least you're getting you're getting the other things from Google One. I've sent a message to Jose. We'll see if he pops up. Might buy Shift 4 at these prices. Did it drop again? I did buy a little bit yesterday. Did buy a little bit more yesterday. Someone did ask me yesterday why I buy every time with a magic number, $1,000 here, $1,000 there. It's big and not doubling down. So I'll explain the rationale behind me going into these types of positions slowly but surely. It's purely because imagine if I bought first time, I think, what was it? Let's say around here. If I doubled down, or maybe, I think it was maybe a little, when did they report? They report here. Okay, never mind. Let's say I double down here. I'd have no cash left, not only to buy more Shift 4 right here, but I'd have no cash left to buy Rubrik, which was also down a little bit. I have no cash left to buy the local, etc., etc. So me buying, yes, I go with $1,000 every time, or maybe 1,100, depending on how many shares I'm buying. But it also shows that at one point, let's say I can buy 50 shares with 1,000. Then if it drops, again, I put in 1,000, but suddenly maybe I can buy 60 shares. My point is to accumulate more and more shares. Yes, of course, if I had a money tree and money was flowing in unlimited, then I would double down every single time. But that's not the case. I have limited cash for now. And that's why I take opportunities. We see Shift 4 drop, I added a little bit more. We saw the local drop, I added a little bit more. If I double down every single time, then yeah, there will be positions where I wish I had the cash to add more, but because I doubled down, I have no cash left. It's basically, in short, dollar cost average across the board, basically. And Jose is joining in 5 minutes. Jose is joining in 5 minutes. PayPal should buy Shift 4 with... Yeah, no. I hope not. I hope not. It's probably going to cost them way more than 5 billion because you always pay a premium. You always pay a premium. Plus, I don't think it's worth it for PayPal to start trying to integrate all of it. Not worth. Plus, I think Shift 4 can be worth way more in the future. Even if Gemini is best or soon again to be the best, customers likely not switching with other connectivity. Yeah, but enterprises, Google Enterprise, Workspace, and all of that is very, very well integrated. And don't forget that Google can offer a lot of things for free because their core business is a money printing machine. It's not something that the rest can do. They can, but they'll never turn a profit, which eventually is going to be an issue. Eventually is going to be an issue. Thoughts on A-Lab? I have no thoughts on Astera Labs. Maybe Jose has some thoughts on Astera Labs. Let's see if we have some more analyst coverage on some names we do cover. We have a Google note. We have a Google note. KeyBank reiterates overweight, maintaining price target $300. Gemini 3 sets the benchmark. Launches include anti-gravity. I didn't test this one out, but this is for the coding folks out there. A full stack AI strategy enables broad access for consumer developers and enterprises. Model supports attractive financial returns. Okay, at least here we get a calculation. So their price target of $300 is based on 24.5 times 2027 PE. Not that crazy. Not that crazy. I'm sitting on 40% cash right now. Is it the right strategy? I mean, I don't know your... and again, you might be retiring next year. I don't know. It's definitely not a bad thing to have that much cash right now because I assume you can look at very attractive names right now and be quite comfortable adding to those. Thanks for the super chat. Why Shift 4 in this sector over others? Purely because, one, it's a small company, it's already profitable, it's very cheap. There are leaders in key categories. Hospitality, restaurants is number 2. Number 1 is Toast in the United States. Sport venues. And, well, previously they had Jarrett as CEO, is still the largest shareholder. It's a shame he's not CEO, but it's very good that he is now leading NASA. But, yeah, why Shift 4 in that sector over others? Because of that, because they do have a huge reach, not just United States, but worldwide. And it's just very, very cheap. Very cheap. Yes, I know about the debt. So we have here for Meta is another positive one. Okay. Let's see if we have... Don't have that much. Target did report and comparable sales did miss. And I did see something that they partner up with OpenAI for something. I don't know what that was, but yes, even Target partners with OpenAI, but it doesn't move the stock anymore. It does not move the stock anymore. Partnerships with OpenAI. Okay. XYZ, Block previously Square, announces a $5 billion increase to share repurchase program. So this one has been... Yeah, wow, I did not know that this... Okay, this is also getting like the PayPal treatment. This is back under $60. Back under $60. PayPal X dividend today. Yeah, correct. Can you address the following issue? CoreWeave and Nebius will have very narrow margin expected. expected, even if they will be profitable, and most GPUs, well, perfect timing, my friend,
What's going on? Good morning.
because we have Jose, the semiconductor expert, back with us. Good morning. How are you?
Good morning, Neil. Can you hear me? I don't know if my mic is
Yeah.
set
No,
up.
we can
Yeah.
hear you. We can hear you.
All right. How's it going, man? Happy Nvidia earnings day. Hopefully,
For
we get
now,
some.
for now, happy.
Yeah. Are things green free market right now? I haven't even checked.
Yes, they are.
Oh, very nice. Very nice.
Yes, they are. Suspicious, huh?
It's
Suspicious.
very, very suspicious.
Um, we'll we'll touch on the expectations in just a bit now that you're here. But a question popped up just as you came. We talked a little bit about this in private. So CoreWeave and Nebius will have very narrow margins expected. Again, speculation expected. Even if they will be profitable, most GPUs have 3 to 4 year depreciation. What do we think?
I think that depreciation is actually a lot longer. CoreWeave yesterday had a event. They had a conference, and in that conference, they talked about how the Hopper just got finished one of their biggest Hopper cluster, which is a 10,000 GPU cluster, just finished their 3rd-year contract, and they got renewed within 5% of the price. And that's an extra two years or so. Um, the other thing that they mentioned is that just a year ago, when they were making long-term contracts with customers, it was about 2 to 3 years were the long-term contracts. Now the long-term contracts are no longer 2 to 3 years; they're 4 to 5 with added extension, even added to that. So 4 to 4. I forget who was the player, but they mentioned a 5-year plan with 2 1-year extensions. So in theory, a 7-year product. Then outside of that, they mentioned that the only ones that are really looking at the big GB300, so the most updated AI chip, are the AI labs. But your enterprise companies, the ones that are just starting to get to the AI market, they're fine with the Hopper. They're fine with an H100, H200. Some are even fine with an A100. So you finish paying off these GPUs at 3 to 4 years and capex on the data centers, and then everything after that you can keep on running and making money. And so I mean, I definitely understand the fears about it, but I think the GPU depreciation of 3 to 4 years is very, very, um, I don't know, bearish is it's wrong, right? You have a lot of use cases for GPUs, and the great thing is they're not all just buying one GPU. I think Microsoft CEO mentioned it perfectly in the I don't know if you saw it. I forgot what the interview with Dylan Patel and I forget the other. um
Markesh Patel?
Yes, yes. Um, see, Microsoft CEO mentions that they didn't really slow down on capex because of slowdown in demand. The thing is, they wanted to stagger their GPU models, right, or GPU data centers. They wanted to have some data centers with Hoppers, then with some Blackwells, then with some Rubens. The worst thing that you could do is kind of have all Hoppers or all Blackwells, because then you're not following the trend. And this is something that Jensen has also mentioned in the past. He literally tells us that he tells his customers not to buy all at once. He wants them to buy in increments because he knows next year he's going to have a better chip. So he wants to make sure his customers have the best possible return on these investments as well. So, I mean, yeah, hopefully that answered a little bit. And any thoughts there, Neil?
No, I agree. I agree. I talked about this yesterday as well. Just wanted to hear your thoughts on this. Also, there is this misconception again that CoreWeave is going to zero because they have a lot of debt, and having debt is bad. But CoreWeave themselves have told us time and time again, they have debt. That debt is used to service the contracts, right? It's not, oh, it's like I'm going to take out a loan for a house, but the house is going to stay empty. No, I'm taking out a loan for a house because I already have a tenant for the house that's going to pay me once the house is delivered. Now, of course, there is a risk of delays, right? If there are delays, then that could be risky because until they deliver, they're not getting money from a Microsoft, for example. And I think that's what's been weighing on the stock right now, especially since they are paying, I think last quarter, over $300 million in interest. Interest rates might stay a bit higher for a bit longer if we're not getting another rate cut. That is affecting, of course, a company like CoreWeave. And if there are delays, well, the bank is still expecting the payments, but Microsoft is not going to pay CoreWeave. And that's why we're also seeing CDS have gone up as well for CoreWeave, for Oracle. But if everything is going according to plan, if they do deliver these data centers on time, or in this case, even if it's delayed, but the customer said, you know what, it's delayed, we'll anyways pay you the full amount, then I don't think that something has changed here for now.
Yeah, I mean, it's definitely. I'm not trying to say don't look at the interest you're paying, right? Obviously, the balance sheet is important, right? That's definitely important. You need to make sure, hey, how is this company going to be making this money to pay this amount of debt? I think CoreWeave has about 14, $15 billion if you include long-term debt and current debt that needs to be paid off right now, which is I think is closer to 14, $15 billion. Now, first, the way they do financing is very interesting. They do their financing in kind of like trenches based on these data center clusters. So one cluster can have one loan from one lender, and another cluster has another loan from one lender. And the reason they do this is if, I don't want to say God forbid, if some bad issue happens, and they owe the lender something, it's only going to affect that one data center. It's not going to affect everything else. And these loans are backed by two things. First, they get these major contract wins. They get a contract win from Microsoft. They get a contract win from Meta or Google. And they go to the lenders and say, look, we have this 5-year contract. Can you give us this loan? The lender goes, yes, we'll give you this loan. But then they also give like another kind of collateral with it, the GPUs themselves. The GPUs are holding their money's worth. So if for some reason it goes down, the company is not going to break down, but that data center that was just selected for that revenue segment would be taken away if things start to look scary, if they for some reason can't kind of collect or get another customer for that data center. So the way they've collected it is the way they do the lending is more in trenches where it's based on GPU clusters opposed to like looking at it as a whole entity, which I think is a great distinction.
Yeah, I agree. I mean, I don't know if you've seen yesterday's Financial Times piece on the Oracle thing, right? The $300 billion from OpenAI is now worth, I mean, minus $74 billion or something like that, because of the sentiment around that these projects will never be made. Also, there, some people are hedging their bets, buying credit defaults from Oracle in this case. It is quite crazy how in a month the whole thesis sentiment has completely changed. It's as if, okay, a month ago everybody believed it, or maybe a month and a half ago everybody believed in the whole this build out and capex spending with high return on investment in the future, and suddenly now it doesn't exist anymore. Now it doesn't exist anymore. Some people will say, yeah, but that's usually what happens when the bubble bursts. Again, if I look at Meta, Google, Amazon, Microsoft, AMD, today we'll see Nvidia. Seems to me that they're all still quite profitable and still building heavily.
Yeah, and I mean, again, the sentiment has changed a lot, and one of the main reasons is right when Oracle came out, you only really had that Oracle and OpenAI deal. But then OpenAI, like I've talked about in the past, is from the streets, and it's going around and making deals with everybody: OpenAI, Broadcom, OpenAI, AMD, OpenAI, Nvidia, OpenAI, and whoever. So now it's like, how are you going to pay all this? And the question I always hear is like, OpenAI is not profitable. If it's not profitable, how is it going to pay all this? And I think that's the wrong question to ask. Because when it comes to profitability, I don't think OpenAI is going to be profitable for any time soon. And if you think about OpenAI as a company, there's pretty much two expenses that they have. The first expense is their engineering team, which obviously we know is heavily capex. Their second expense is compute, the compute. So every time they get $20 billion in revenue, which is what they expect this year, right? I think somewhere north of 20 billion. Sam Altman talked about it. $20 billion of revenue this year. What are they going to do with that $20 billion? They're going to do it, give it to engineers, and give it to compute. I'm going to guess probably 90% of the expense is AI compute. So out of that 20 billion was 90% is I think 18 billion. So $18 billion will go to compute. So now they expect next year. So they used all the revenue they collected and used it all on expense. So obviously they're not going to be profitable. Next year, they're going to expect to double $40 billion in revenue. All right. So $40 billion, again, 90% is going to go to compute. So it's going to be what? $36 billion is going to go to compute. So that's how they're going to do it. And it's, you're not going to see OpenAI be profitable anytime soon. But that revenue growth is what's going to help pay off that type of um of contracts that they have. And most of the contracts that they have, Neil, right, I think are like 7+ years. So here we have 2030 estimates of $200 billion. So you add $200 billion in 2030, you have 100 billion in 2020, 150 in 2029, 100 in 2028, 50 in 2027. What's that? That's already adding up to what, 700-800 billion dollars. So that's how you get to those 1 trillion dollars in the future. It's all based on that revenue growth, and that revenue is all going to go into compute, which then still continues to see that non-profitable aspect of OpenAI.
Thanks, Roberto, for the super chat. Does OpenAI have a moat?
Uh, compare compared to like Gemini and XAI, I don't, but I think the moat within them, not that I can think of right now. Um, the moat that at least Anthropic, OpenAI, and XAI have is just the GPU cluster and the amount of funding. Um, no one out there can build these types of models anymore, or if they can, they're definitely going to need to spend a lot of money. And with compute being so constrained due to power, it's it's all of who's going to have the most compute to be able to serve the most people. At the end of the day, that's going to be the thing. So it's whoever has. I think compute and money at the moment is the moat. But I can't really think of why. I'm a huge fan of Gemini. Gemini has it all from Google. I can't see why OpenAI has a upper end or what is it? Upper hand on Gemini. Um, Outside of maybe their engineering team, which I don't know how to give scores to. The only thing is we're seeing them doing great things with Sora 2, with their GPT 5.1 Pro, right? So it, at least in forms of models, they're still very competitive. And I don't know if that's a moat and if that's based on their engineering team, but it is something to consider that they're still up there within the Googles and in that space.
I would say I mean, the fact that they came out first, so they have that term, right? It's like the Airbnb of something, something, something. So in this case, it is, oh, let me let me ask ChatGPT, even if you are going to ask another model. So they do have that. I'd say they do have, of course, a super close connection to Nvidia. They have Microsoft behind them. Um, Government connections, maybe worldwide.
And
Then
uh,
IPO. IPO is going to raise them a ton of money that they can use for whatever. But I don't know when that's going to happen.
And Neil, when I think of these, I don't see just OpenAI and Anthropic, right? It's just, let's say, right, this $200 billion and $147 billion. The market here sees with the top two AI companies is going to be a $300 billion revenue segment, and that's how I see it. I don't see it as OpenAI and Anthropic. Is if OpenAI fails to do what it's supposed to do, Can all that money go to Anthropic? I think the answer could be yes, or whoever, is split up to the next two players, or whoever's going to be the one that dominates. But I do believe the revenue projection on whoever is going to be the top two companies is going to be within this type of trend. And if OpenAI is failing, it means they're no longer going to need that compute. But whoever is winning is going to need that compute. So that compute is that OpenAI has rented out and built out from Oracle or from whoever. Whoever is that leading player is going to be taking it, because it means the AI market is growing. It means more people are using inference. It means whatever technology, robotics, autonomous driving, healthcare industry, someone might not be OpenAI, it might not be Anthropic, but there's going to be someone that's going to need that compute. And since we are power and compute constrained, there's only selected amount of players you can go to. So I get it. Always looking at OpenAI and Anthropic, but it's if this AI market it's real and those two don't survive, someone else is going to survive, and someone else is going to need that compute, and someone else is going to pick up the compute that OpenAI or Anthropic had rented out from all these big players.
Yeah, I mean, with OpenAI, the message that I'm getting also from Sam is that he really thinks that he's going to come out with the next pure AI device that will run, of course, on OpenAI's OpenAI's platform. Whatever that device will be, I don't know, but he believes that's how they will grow, of course, the adoption. And I think that that's one of the ways, right? Because right now you do have ChatGPT, you have Gemini, okay, you have Grok, you have Claude. Um, but if you want Meta AI, I don't know. To be honest, I don't know who uses it, but okay. Right now, it seems like if you want to win, which is funny to say, if you want to win against Google, because I do think that Google is the number one right now, is you have to come out with a solution, a device that is very, very different to everyone else and actually adds, I would say, maybe 5x multiple of value to your day to day life.
I agree, Neil, and I think that's why Microsoft actually shared something interesting in that Patel interview. Um, that he mentions that right now a lot of AIs, when we're looking at AI agents, what they're really just looking is more of like looking at the pixelated screen or understanding, right? Hey, this is a screen share. I'm reading the screen and trying to understand what's happening behind it. So that's how I move. I know the mouse is going this way and that way. But Microsoft, for example, they have such a huge suite of products. And I'm guessing the same can go for Google, right? With Excel, it's no longer just looking, if they make a model for Excel, it's not just a model that's going to look at the Excel screen, but understand the ins and outs of it. Because obviously Excel is created by Microsoft. So they have all this data of what works, how to kind of collect that formula. I mean, if you're looking at Excel, right, you can see a response, but until you click the cell, you don't understand what's the formula and how that happens. So here, oh, just the market opportunity for software players where they can integrate it inside their model is a huge opportunity. And again, we see Microsoft, they just announced that Anthropic is going to be part of their systems. I think Grok is also part of their systems as well. So again, it doesn't matter if OpenAI is that top player. Someone is going to be that top player, and someone's going to need that compute. Amateur hour, you're muted. Let me say, Jose is the best. Thank you. All right, now continue with what was next.
No, I didn't say anything of substance. Just we have 10 minutes until the open. Nvidia later today. Any crazy predictions you want to make?
No, I don't know. I don't like predictions. Everybody's hoping for the for Nvidia to save the market. I just don't know if that's going to happen. They have to say something crazy. They have to give some crazy guidance for that to happen. I mean, it's possible for that to happen, but I'm just not getting my hopes up. These past few weeks have showed me not to get my hopes up. So
Yeah,
I'm
okay,
a
but you
broken
don't.
down man right now, Neo. So I'm not expecting much. But if we get it, I'll be extremely happy. I think if we get some crazy guidance, right? I think guidance is expected to be 61 to 62 billion dollars for this quarter. Yeah, so around consensus around 60, 61. So about 61 to 62 billion. If we get closer to 65 billion, which is definitely possible, thanks to that crazy number Sam Altman, I'm not Sam Altman, Jensen gave us during the GTC BC event, it is possible for us to maybe see somewhere around 65 in guidance. Um, but yeah,
Yeah,
I think guidance is the only thing we care about.
because I mean, from the information that we got from analysts around Blackwell, is the situation supply wise is much better than before. So if they are able to deliver way more Blackwells than what they were able to do before with Hoppers or the first generation, then we could see a huge guidance beat. I also think that they will be asked about the if they're seeing industry-wide um, acceleration in adoption in maybe outputs as well, because that's also definitely something that the market is asking right now, right? They're all making huge investments, but who's actually making money other than Nvidia? Um, you would like the whole ecosystem to be making already quite a lot of or starting to make money to see the results of all of these investments. So it's also less, it's going to be more about the whole AI industry and not just in what Nvidia is reporting, I think.
Yeah, and we have, like you mentioned, we have a lot of stuff happening right now, right? You have, I think someone mentioned here, the Saudi deals kind of happening or being discussed right now. I think yesterday, we heard that there might be some announcements on chip export restrictions. Deals happening in the next few days. So a lot is happening within this industry. And yeah, I mean, demand for Blackwell is going to be crazy. If they give us some great update on maybe, let's say they say Rubin is coming out earlier than expected, that can also be extremely bullish. And then that Anthropic deal was actually pretty cool yesterday. I don't know if we even talked about, I don't know if you talked about that yesterday, but Anthropic CEO is one that really isn't a fan of Nvidia, and for them to kind of announce this partnership with Nvidia, I think it shows the excitement for the platform.
Yeah, pretty big deal. But again, some people are skeptical around the nature of the deal, right? Because it's Anthropic going to spend a lot of money, and then Nvidia and Microsoft are going to invest in Anthropic, and so it's again this circle jerk of revenue. But
But it's so crazy. I mean, for Nvidia, right? It was $10 billion, respectively $5 billion. I think it was. So it was 10 billion. Each of them can invest up to $5 billion. That's how I read it. I think some other people read it differently, but they mentioned a $10 billion investment from both Microsoft and Nvidia, respectively, both up to $5 billion. $5 billion doesn't buy you the amount of GPUs you need for $30 billion of compute. Um, I think for Microsoft and Nvidia, this is just a great way um, for them to get equity in a company that, if it's growing at these levels, they're gonna end up getting a asset growing asset growing investment. So, I mean, if it works, it works. But yeah,
mm,
the circle financing is getting better,
the circle of
bigger.
life. No, but you know, I mean, it's funny because when you look at it in the VC world, it's exactly the same thing, right? It's people giving other companies a lot of money to usually buy a service from another company that they also own in their own portfolio of companies. So I don't see it as strange, and especially not since it's coming from companies that are extremely profitable, like Nvidia and Microsoft in this case, and some other cases with Google or Amazon. So it's just these companies making sure that the ecosystem is growing. These companies are getting the funding that they need. Yes, of course, they are also benefiting from it, but okay, that's fine. But yeah, there will be companies that will probably go belly up in the future. I'm pretty certain that that's going to happen. but I'm not that worried about this whole circle of revenue right now.
And I showed this in my video yesterday, right? It's kind of a great way of showing. It's like back then we used to have this house of cards, and it was only carried by OpenAI because OpenAI was the one making all these deals. But now we're seeing Anthropic doing the same. So in my theory, it's like the base of that house of cards, whatever the house of cards of AI, is just getting stronger. Eventually, you're going to see XAI do certain deals. You're going to see certain other AI companies. You're going to start to see enterprises kind of becoming some part of the balance. So it's like this house of card joke is getting strong it's getting a stronger base when you see, in my opinion, deals like this coming where it's like, oh, if OpenAI fails, that's okay because we still got Anthropic that will succeed. Oh, Anthropic fails. Oh, we're still have that other company that's gonna be the third leg in this space, um be the one supporting the system. So the more you start seeing this, the more irrational the one company failing becomes as a bearish thesis, in my opinion.
You were always almost going into the more you spend, the more you'll save. Jensen Jensen phrase here. Um, any interest in Oracle now that it has fully retraced? Actually, let me show it here. Yeah, Oracle fully back to the pre-earnings huge
Yeah.
RPO.
One I just bought.
Interesting.
I'm back in here with Larry.
Max here. Max, can we see you guys finally battle over if Nebius and CoreWeave is better? I mean, we both own
Both.
both.
Yeah.
And I bought more CoreWeave yesterday. So
Yeah. And then throughout this time, I have been buying more Nebius as well. So it's like both are, but in my portfolio allocation, it's I have about 3 to 4 times more share to of Nebius, but Nebius is still a good amount.
yeah, I mean, it's the thing with all of it is if you don't, is something that we've said months ago. If you don't believe in the AI story, then we understand that you're skeptical about all of this and you should definitely stay out.
Yeah.
But
And
if you
and Neil, I
believe,
don't know. In that comment, they talked about kind of the no debt to debt. Can we just can you pull up just both of them on the charts here? And we can see there is distinction in debt between the two, but I would not like to say Nebius has no debt, right? I think so. Let's look at CoreWeave. Let's do long-term debt, and we also should do the short-term debt as well because that's what's they're gonna pay in the next 12 months. Yeah, and it's gonna be and
so we have
stack them up.
10.3
Come on,
and
stack them up.
3.7.
Yeah, so 14
So
billion.
14 for
No,
CoreWeave.
yeah,
Let's see what the Nebius have. Hopefully
Nebius.
it's up to date. Long-term debt. Do you see short?
No, I don't know if they short-term borrowing. It doesn't
No, only
seem
short-term
like
borrowing.
they have it.
No.
No. All right. So you have 14 billion to 4 billion, right? I think that was the thing.
With a
So
huge
you have about
increase.
10 billion dollars less debt than than um than CoreWeave right here. But we do know the active power that both these companies have. And active power, for those that are not are unaware of, active power is when the power is being used and has GPUs connected already as well. Nebius has 100 megawatts of active power, I believe is the number. CoreWeave has 600 megawatts of active power right now. So you have about a
We
500.
will be back. We will be back, Jose. You
Oh,
can do it.
ding, ding,
You
ding,
can
ding,
do it.
ding, ding, ding. Ding, 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 ding. We have the market open.
Bing, bing, bong, bing, bong. We are back. We're back, ladies. 7.2% ladies, and the rest gentlemen on the channel. Market is open Wednesday, November 19, Nvidia earnings day. We have a ding, ding, ding from Jose. We have some green. We also don't look at the heat map. It's from yesterday. It's from yesterday.
Update. We have green. Nice.
We have some greens. Yes.
Even if
PayPal
it's only
is
short lived, I'm happy.
PayPal is red because there is an analyst conference right now with CEO Alex Chris, and he did say that they are still seeing some consumer slowdown in Q4. There's a lot of pressure on the consumer right now. So I guess that's why the stock is down a little bit. But for the rest, we are seeing, of course, a lot more green than yesterday, but it will change. It will change real quick. But we'll come back to this in a bit. We can continue here with the
So
100.
Yeah, you had 100 megawatts of active power of Nebius, and you have 600 megawatts of active power for CoreWeave. Now, still a $10 billion difference. We do have some data points. Iron, right, mentioned that for them to grow a 200 megawatt data center in forms of GPUs, they need to spend about $5.9 billion. So about $6 billion per and connected power. I don't know if connected powers that are immediately upon GPU installations. Yeah. So we see connected power. The connected power doesn't even have GPUs just yet. They do talk about active powers later on. I think at the end of their slides. Let's see, next one. I think it's the next page.
Let me just search for it.
So let's just go back. So we got that data point from Iron that is about $6 billion in GPU capex for every 200 megawatts of connected power. So if Nebius wants to reach the level of CoreWeave of 600 megawatts active power, they need to raise about $12 billion just extra to get those GPUs. So $12 billion plus that $4 billion would keep them about that $6 billion, close to $16 billion in debt. In theory, if you go through debt, obviously, we've seen Nebius kind of do it a little bit different. I think they did kind of do a little bit of share selling of shares, which is okay. But regardless, it's still the same amount of money, right? You still need that $15 billion or so to get about that 600 megawatts. Now, the other thing is you're kind of getting this diversified of customer base. Now, this is where Nvidia's backdrop is actually pretty cool for CoreWeave. For those that are not familiar, Nvidia has this backdrop with CoreWeave where for the next X amount of years, Nvidia is going to pay CoreWeave money. And it's a typical contract. The great thing is Nvidia uses the supercomputer. But CoreWeave, because they built these massive GPU clusters, right? You know, their clusters are huge. They're usually the biggest out there. They don't want to rent out to small players. They're just renting it out to the big players. But with Nvidia's backdrop, Nvidia what it's doing is, Nvidia has said, if you want, you could take the compute that you're renting it out to me, and you could give it to a month, 2 months, or 3 months to a smaller enterprise who can't make a long-term contract. So that Nvidia backdrop is actually the easiest way for them to get into this enterprise and diversified market without even having to worry about long-term contracts, because Nvidia already has it. If they don't get any type of enterprise players, Nvidia just pays for it. If they do get players, now you're having a lot of these smaller companies getting that enterprise diversified base. So again, I'm not trying to take anything from Nebius. I think Nebius is going to do great, and that's why I own it. I just don't believe the case that Nebius has a better balance sheet and that Nebius is more diversified is the real reason to go about it. There's other reasons to go about Nebius. The AB rides, their Teller whatever. I forget the name of some of the companies that they own. Like, I think those are a better reason to prefer CoreWeave over Nebius. But saying that and market diversification, I mean, obviously, if I have 100 megawatts of active power, I'm only going to go for smaller players at first. But eventually, you're going to see that revenue breakdown be pretty much Microsoft and Meta, which is going to take out most of their revenue concentration.
Yeah, for now, of
Yeah.
course, because again, they're still, despite the market cap not being that far away from each other, from a company's perspective, they are of course much
Yeah.
smaller than
Yeah.
a CoreWeave. And again, debt is
Mhm.
not always bad, especially not if it's debt not for sales and marketing or something like that. It's debt in order to, it's debt for capex. It's capex that's needed to generate or to collect that $55 billion in backlog that they have. It's not to buy some ice cream for employees.
And then this is another one, right? CoreWeave doesn't own the power of its infrastructure. It is building its own. The kind of one in Kenilworth, and I forget where the other one is. Pennsylvania. Both
Yeah,
are its own infrastructure, its own power. Um, and I think we're seeing. I don't know about Nebius, Neil, so maybe you can correct me. Do they own everything, or do they work with certain players as well? Um,
they also work with
it's
certain
a mixture of
players.
both, right? I think some of them. I think the one in It's the one here in New Jersey. Is that one owned by Nebius? That
Yes,
one's owned by Nebius
it's
itself.
I think with Data
Yeah, the
One.
one in
It's with
Vineland.
Data One.
Oh, with
Finland is I think Finland is owned,
um,
but the one in New Jersey is definitely with Data
Data
One.
Vault.
Data One or
Vault Data? No.
no, with the Charles dude that always comments on LinkedIn, the French dude. I don't know,
Data Vast
but
Data.
yeah, no, it's not fully owned by
Yeah,
by
and
Nebius.
it's and we've heard from other big players, this part is only about 10% of the capex itself anyways. So yes, the margins is
Yeah,
different, but it's not a marginal difference in margins. Either you own it or don't own it. Obviously, you can make a little bit better from it, but 80% of the long-term time of this data center capex is the GPUs themselves. Yeah, so strategically self-building, right? They have the Lancaster and Kenilworth ones. So it's it's fun. I think I own both for a reason. But again, there's just a lot of misconception, in my opinion, for CoreWeave, which gets me excited because it's. I think this creates some opportunity for investments in it.
I agree. I agree. Um, who's green? So we do actually have these
A
players
flat.
that are
There's some
green.
green. I forgot this color existed, Neo.
Yeah. Applied Digital green 4%, Nebius is up 4%, Iron is up 2.1, CoreWeave
It's
1.8.
something new with
Uh,
Google, or is it just the excitement from Gemini?
I think it's the excitement of Gemini. I haven't
Nice.
seen anything. I haven't seen anything new from Google and Nvidia. I still don't understand the people that say Nvidia. I don't know. Um, Nvidia is up 2% here as well. Marvell.
This
Oh,
was
okay,
one I have
Marvell
to
did.
look into some more. I've just been getting excited of AI infrastructure. Um,
Yeah. Um, but yeah, Meta is down another 1.4%. This has been
mhm.
oversold. Meta is
I can't
really
believe
getting
Amazon is
cheap.
back to pre-earnings level, and they had that massive growth in AWS. This is one that I just started to add into Neo as well. It's one that one of the Mac 7s I didn't own. Um, but I think after those earnings and coming back to these levels, I'm actually pretty excited to be building a position on this one.
Yeah, this is crazy. I mean, if we can go here, well, it doesn't really matter. $5 extra won't really matter that much for the long term. But yeah, it seems like the names that are pretty much going to be affected by whatever happens with Nvidia are green for now. It might be a rug pull in the
Yeah,
making, potentially,
but I'll enjoy it for now.
potentially. Yeah, for sure. Um, let's see what an Adobe is doing. Adobe is buying Semrush for $1.9 billion, and the stock is down on that news. Salesforce also down. Okay, so the usual stocks are down. It seems. Um, I know you didn't want to make predictions, but if you had to go and say best case, worst case for
For
tonight.
price action or guidance?
I mean, I guess it goes hand in hand
Oh,
with
okay, yeah.
the
Best case. So best case. Okay, so we do see a green market. I think if guidance is closer to $65 billion, right? That's where I expect it. Because of the recent pullback, I wonder if in line, unless we see a crazy day today, if we see a crazy day today and things go green, then you're expecting a lot. But if the sentiment continues to be very neutral or negative, how it's been the past few days, even if it's just in line, I think the market would be okay. And in line is around $62 billion in revenue. Obviously, anything below 60, if they give us in the 50s, even in the high 50s, I think it's game over for stock prices for a while.
high 60s.
No, if they give us anything in the high 50s, like if they give us 59, I think
Ah,
it's game over
50s.
for AI stocks, at least for the quarter.
Oh yeah, of
Like
course.
if they go
Yeah,
and say
because that
59,
the
yeah,
mist.
it's game over. You
Yeah,
won't.
yeah.
I'll be under a rock for the next year without opening my portfolio. Um, but I think mid to high 60s can give us a nice sentiment shift right now. And
How much was the beat last quarter?
I honestly forget. The great thing though is now we kind of already have stopped any of this China nonsense, and it's like every guidance
Mm-hmm.
is just pure growth with or without it. Without it, I mean. But it
Yeah,
was a massive growth. I mean, they 60 just the guidance they're guiding for 50. I forgot what we're expecting in revenue this quarter. 50 something, 55.
let's see.
I have my slides somewhere. I'll look at them.
Plus, we might get UAE,
Mhm.
Saudi Arabia
Yeah, which would be
chip
nice. We
sales.
saw some great
Yeah,
pictures of everybody being happy in the White House yesterday.
yesterday, yeah, with Cristiano Ronaldo.
Was he there too?
Um, yeah, yeah, yeah. He was at the front of the selfie. Um, because he plays in Saudi Arabia. He's an ambassador for the World Cup in Saudi Arabia. I don't know when that is.
Okay.
Um, and so of course he's going to be there. 55.6% year-over-year growth last quarter for Nvidia, and this
I
quarter
think it's still
it's
at
expected to
55.
also be
Yeah. Mhm.
55. Yeah, which is
Yeah,
crazy when you
that's
think
wild.
about it.
And can you do the next one? What would the next one be
Without
if they
China.
do the 60? That is wild.
If you do,
But look, this is what media outlets are gonna paint. Slowdown is the growth is becoming a straight line now because it's just gonna be 55, 55, 55. It's game over. But it's like 55% on the year-over-year growth basis is insane.
and then it dropped to
But we
43.
got that Ruben,
Like,
baby. Not then yet, but
yeah,
maybe.
yeah. So it's great. So yeah, when Rubin, I know. Wait, when is this? Um, so we are going to be here. Then this is February, March, February, March, June, the same. So here we should be what Feynman almost,
Yeah, October 2026.
or
No, that's Ruben Ultra. That's Ruben.
Ruben Ultra.
No, that's just Ruben, right?
You no, because we are. It's going to be one.
Yeah.
No,
So right now we're in
excluding this
Blackwell
quarter.
Ultra.
So 1, 2, 3, 4. So 1 year
Yeah, so
from
that's
now.
just Ruben.
That's just
Yeah,
Ruben. Okay,
2027 is
and
Ruben
there.
Ultra,
Okay,
and
so
2028
28.
is Feynman.
So, huh? 28. Their fiscal year. Because calendar year, I think is 27. No.
Yeah, I forget. So just calendar year next a year from now, which would be October 26th, right? The October 26th estimate. A year from
Hmm.
now is when we get Ruben. We get a second half of calendar year 2026 or
Okay.
or fiscal year of 2027.
Okay.
Yeah. And that
Hmm.
one, I think that's actually the main reason Anthropic signed this deal with Nvidia. Um, and I wonder if this is why Amazon is actually selling off. I wonder if some people are just fearing that Amazon has now lost Anthropic to Google and has kind of now lost it to Nvidia a little bit more and Microsoft. Um, I think that's how the market might be
I mean,
perceiving it, but I think it's just their capacity is growing so quickly that they need to go all over and be from the
yeah,
streets as well.
because they still have like the two clusters from Anthropic. I think one is only coming online now, and then there is a second one that is still expected to come online, like a huge AWS cluster from Anthropic. Plus, they still own a big stake in Anthropic, Amazon and Google. So if Anthropic becomes a huge company,
Well, now
I guess
Nvidia
they
and
make money
Microsoft
from
are
that.
also in the maybe not a big chunk because it's at a bigger valuation, but
Yeah, but
yeah,
yeah, voila, they came in
yeah.
later.
And the
Um,
so the reason I think Anthropic made the deal with Nvidia is this with the Rubin, which comes out in the second half of 2026. They announced that new ASIC solution that they're going to put in between the CPX. And NVIDIA has mentioned that the CPX is really great for massive context workloads. And there's two really big workloads that use massive amount of tokens. The first is video, and the second is coding. And we know that Anthropic is one of the is the big player that they are right now because of coding. And I think NVIDIA's CPX is going to help them create an amazing TCO for whatever type of next coding solution they're going to have coming up. I Anthropic had to wave the white flag and say, "Yes, Jensen, we're with you."
yeah, I mean, plus we have Nvidia and Intel partnership advancements to be seen in 2026.
We'll hit
I
300
wonder
yet?
what
Did it hit
when
300?
did it
What was his
hit?
all-time highs? Is this right now
I
all-time highs right now? Yes, it is. Wow,
a minute ago it was all time highs, but yeah, it was at 300.
very nice.
Very nice. More than doubled since the April lows. Would you look at that? Would you look at that? Wonderful. Wunderbar. Um, okay. Any other things I mean, it's been a while. Any other things you've seen or heard or
Yeah. Uh,
think is worthy of our
I
attention?
just want to answer this question. Thoughts on white fiber? It's one that I own, but with this backdrop right now, it's I've just been when I tell you, Neil, I don't know if I'm either going to be extremely broke or extremely rich with CoreWeave. With CoreWeave, not necessarily, obviously. As long as Nvidia doesn't drop, I'm doing good. But that's where I've been really focusing a lot of my money into. So I haven't really bought any of the other players. Um, Recently, I was like, you know what? Maybe I'm going too heavy on CoreWeave now. I started to buy some Nebius. And then I'm like, you know what? Maybe I still want to get into the Mag 7. So I'm going into Amazon and Meta right now. So I want to say those four have been my biggest changes to my overall portfolio right now. Meta and Amazon.
Well, you know what, Jose? It's we are either going to be very rich or we are going to be very poor.
What's the, you see, uh, if you see me back here more often, you know things have changed.
And no
No more
more Florida
vacations,
for
no
you,
more
my friend.
nothing. I'm just here every day. There'll be signs, as
Uh,
Roberto has said.
yeah, there will be sign. It goes both ways. It goes both ways. Whether we have a huge mansion or whether we live in a tent. That's there's no in between. There's no in between. TMDX is up today 8%. Yes, because the CEO has bought more shares. Again, something that Alex Chris from PayPal might take a note because it's been the second time since Transmedic CEO bought shares. I think in August he did this as well. So very good, very good. But yeah, let's see if we
Let's
can.
see.
Well, up of 300.
Nice. Anything else, that I mean, that's been crazy. Mm, I don't know. Did we talk about AMD event? Have we been together for that or no?
No,
That was
no,
crazy. That alone is insane. $20, at least $20 of earnings per share
$20 EPS.
by 2030. I just that one's just another nice one.
it's like the 3 to 5 years guidance is if they hit it, it's insane. The operating margin, the free cash flow margin, um, and then yeah, the $20 EPS is crazy. Is crazy.
Yeah, they mentioned, I forget, they're expecting 50% market share in the data center CPU space. And then they still expect that market to grow dramatically. I forget what was the number that I calculated, but just that market alone will be tens of billions of dollars of annual revenue for AMD, is pretty exciting because they are definitely killing it in the CPU space. And I mean, they recently did the benchmark with the MI355. The MI355 on benchmarks were pretty interesting. It was definitely good to see them first time doing training with the MI350s and MI355s. So we're definitely going in the right direction. I'm excited, definitely excited for the CPU, and a lot of opportunity for the GPU, especially with the 450 coming up next year.
Yeah, in the market share CPU wise, it's not just x86 from what I understood. It's ARM included. Um, but yeah, it was a great analyst day. I mean, the first in a while, which I understand now why. And now we understand why they didn't want to give us that much information a week earlier during the earnings call, because well, they dropped the mic during the analyst presentation.
Yeah.
Um,
Which is so stupid. They should just do it. It should just do it on, or I guess, I don't know. I guess if they would have shared a lot of
because they
that
don't really,
information during the earnings, it would have been too many Q&A, and it wouldn't be fair to only give
yeah,
investors 30 minutes of Q&A on earnings and that information. So I guess it makes sense, but still.
yeah. No, it's crazy. It's crazy, but I mean, people need to understand that this is a 3 to 5 year timeline. So it's not, we shouldn't see AMD at 500 today, but if they do succeed, it's just a question of when it happens, not if. Um, but yeah, crazy,
Uh,
crazy analyst day.
I mean, in theory, right, if you expect $20 of earnings per share by 2030, in year 2029, you give it a next 12 months PE ratio of 30. So in theory, you should have a $600 price target by 2029, right? Based on forward PE ratios. Well, right now for AMD
Or
is
yeah,
like, for most of the semiconductor industry, the forward PE ratio is around high 30s or mid 30s. So be a little conservative, give it a PE ratio of 30. Um, so based on that 20 earnings per share on 2030, 2029 should be somewhere around $600.
not bad for a foreign something year holding period, I would
Yeah,
say. Not bad at all. People are saying Figma is crashing, down three
this is
percent.
wild.
Yeah, I mean, I guess Adobe is going. If they want, they can pay now less for Figma. If
They
they
could just
wanted to again, they can buy it for 18, 17 billion, and it's a revenue-wise a better company today than it was a couple of years ago. So maybe worth
I,
it.
I
Maybe worth
I
it.
am curious, though, Neil. I've heard the thoughts about it before, but it really, now it's really sticking to my mind after I saw that interview with Microsoft CEO. There was a question saying that software companies used to have very low capex, right? It was just designing the product and that was it. But now you have to include the amount of money you're going to be spending on AI, right? I mean, Adobe pays for either compute for whatever model, so it is going to change their margins dramatically. Um, of how compared to pre AI stuff. What does that do with valuation metrics? Obviously we won't kind of pay the same valuation metrics we used to pay maybe back in the 5 years ago. But how much different does it change now as this becomes a little bit more heavier on capex than they were before?
Yeah, I mean, I know you like GitLab. I don't know what your view is on it right now. They report earnings maybe early December. Um,
No,
Do you own it, or did you
I,
own
I I
it?
owned it. I own it. This is one where I just don't worry about it on a quarterly basis. This is one of just chill
Mhm.
and evolve over time. So I don't think there was anything scary last earnings or the earnings before. I don't expect any revolutionary change here. I think for me, this is just a mispriced valuation, and over time is going to do well.
Yeah, I've seen some positive analyst
Mhm.
commentary around GitLab, um, which is always nice to
Yeah,
see. Which is always nice to see.
I think.
All
Yeah,
right.
Brock come up over 4%. Nice. Not sure why.
Indeed, indeed. I mean, it seems like we are seeing some strength before the Nvidia earnings. Again, might be a dead cat bounce, like a little kitty cat bounce, but yeah. Are you? Yeah, of course not. I mean, we've talked about that before. If you're planning on reducing your exposure to AI names, but it does
No.
not seem
Lately,
like
what
it.
I've actually been doing is I've been selling my low beta names. So, for example, I had a Max 7 ETF. I sold
Hmm.
that. Just to buy more of the individual mags that have taken a bigger hit. That's actually how I did it with Google. It was actually really a really good play for me. Google has done really well, and now I'm doing it with Meta and Amazon. I don't have usually a cash position. I usually have a position in T bills ETF, which is just an ETF that carries treasury. I've been slowly selling some of those, and I still have a good amount of treasury bill ETFs position. But I've been slowly selling and buying, like I mentioned, into CoreWeave and all these other players. So I'm long term, I'm pretty excited about this market. Short term, anything can happen, obviously.
Correct. Correct. With that, we'll leave you, let you have breakfast, but we will see each other later today. We'll see each other later today for the big, as Dan Ives call it, the Super Bowl of the stock market, Nvidia's Nvidia's earnings report. So appreciate you all joining. Um, Seems to be a good market open. We'll see what happens later. We'll see what happens later today. Anyways, thank you all for joining, and we shall see each other